let us talk about something most people avoid: taxes. You know, the silent partner in your business who takes their cut whether you win or lose. And if you are a business owner, freelancer, side hustler, or aspiring entrepreneur in 2025, how you structure your business could be the difference between keeping thousands of dollars or watching them disappear every single year. But here's the catch. Most people pick a business structure based on what sounds easiest. Sole proprietor sounds simple. LLC feels official. S Corp, not sure, maybe that is for the big guys. That thinking is why people stay broke. Because the truth is, your business structure is your first tax strategy. It is your front line. And if you are not leveraging it, you are not just overpaying, you are wasting potential. So let us break it all down. LLC vs S Corp vs Sole Proprietor. And ask the one question that really matters: which one saves you the most money on taxes in 2025? Sole Proprietor, easy to start, expensive to maintain. Let us begin with the most common starting point: the sole proprietorship. This is what you are automatically considered if you start a business without formally registering anything. Sell a product, offer a service, freelance online. Congratulations, you are a sole proprietor. Sounds simple, right? No paperwork, no fees. Just file your taxes on a Schedule C and call it a day. But here is the reality check: simplicity comes at a price. As a sole proprietor, you pay self-employment tax on 100% of your net business income. That means once you subtract expenses from your revenue, the rest gets hit with both income tax and self-employment tax, currently around 15.3% on top of your regular rate. Earn $100,000 net as a sole proprietor. You could owe $15,300 just in self-employment tax alone. That is before you even touch federal and state income taxes. On top of that, you have no legal separation between you and your business. If someone sues your business, they can come after your personal assets, your house, your car, your savings. And while this is not a tax issue, it is a financial one. Because risk costs money. Bottom line, a sole proprietorship is easy, fast, and dangerous. And tax-wise, it is the most expensive option long-term. LLC flexibility, protection, but no magic by itself. Next up, the limited liability company, or LLC. This is the structure most new entrepreneurs hear about first. It sounds legit. It gives you the legal protection that a sole proprietorship does not, and it lets you pick how you want to be taxed. But here is where people get confused. An LLC is not a tax status. It is a legal structure on its own. It does not reduce your taxes unless you elect for a different classification. If you form an LLC and do nothing else, the IRS treats it like a sole proprietorship. Years if you are a single owner or a partnerships. If there are multiple owners, that means you still pay self-employment tax on 100% of your net income, same as before. So what is the point? The LLC shines in protection and flexibility. It separates your personal assets from your business. It gives you a legitimate foundation. And most importantly, it lets you choose how to be taxed. This is where the real tax savings begin. Because once you have an LLC, you can elect to be taxed as an S corporation. And that is where things get interesting. S corporation, where the tax savings actually start. The S Corp is where real entrepreneurs start playing offense with their taxes. First, understand this. An S Corp is not a type of business. It is a tax election. You can be an LLC and file a form with the IRS, Form 2553, that says, I want to be taxed as an S corporation. Now, what makes this so powerful? The S Corp lets you split your income into two parts: a reasonable salary, which is subject to payroll and self-employment taxes, distributions, which are not subject to self-employment tax. Let us say you earn $100,000 net through your business. As a sole proprietor, you pay self-employment tax on the full $100,000. But as an S Corp, you might pay yourself a salary of $50,000 and take the other $50,000 as a distribution. That means only half of your income gets hit with self-employment tax. The other half avoids it entirely. That alone can save you thousands of dollars in taxes every single year. Of course, the IRS does not let you abuse this. Your salary must be reasonable for your industry. You must also run real payroll, file quarterly reports, keep your books clean. But for the business owner who is serious about growth, the extra admin is a small price to pay for serious tax efficiency. And remember, S Corps also allow deductions for things like business expenses, health insurance, and retirement contributions. Combined with the payroll strategy, this creates a powerful framework to minimize taxes legally. Which structure is right for you, and when should you switch? Now let us get brutally honest. There is no one-size-fits-all answer. The right structure depends on how much you earn, your risk tolerance, and your long-term goals. But here is a general roadmap. If you are just testing an idea, making a few hundred a month, or figuring things out, start as a sole proprietor to keep it simple. But know that this is a temporary phase, not a strategy. As soon as your income becomes consistent, $40,000, $60,000 ups annually, you should seriously consider forming an LLC for legal protection and electing S-Corp status for tax savings. The LLC with S-Corp election gives you the best of both worlds: protection, legitimacy, and optimized taxation. If you are already earning six figures or more and still operating as a sole proprietor, you are likely burning thousands in taxes and leaving your assets exposed. It is time to level up. One more thing, your accountant matters more than you think. Most people overpay in taxes not because they lack income, but because they lack information. Find someone who works with business owners, not just employees. The right structure plus the right advisor is a multiplier. The hidden cost of doing nothing. There is one more thing people forget when debating between LLC, S-Corp, or sole proprietorship, and it might be the most expensive of all. It is the cost of inaction. Every year you delay making the switch. Every year you stay in the wrong structure out of fear, confusion, or procrastination. You are quietly handing over your future wealth. You are saying, "Hair IRS, take a few more thousand. I will figure it out next year." But next year becomes 5 years, and by then, you have lost tens of thousands in unnecessary taxes. Money you could have invested. Money you could have used to grow your business. Money that was yours. Most people will not change their structure because it feels complicated, because they fear getting it wrong, because they would rather keep doing what they know, even if what they know is costing them more every single month. But wealth is not created by waiting for perfect conditions. It is created by taking smart, calculated steps before the pressure builds. And setting up your business structure correctly is one of the smartest steps you will ever take. Do not let the fear of doing it wrong keep you stuck in what is definitely wrong. Doing nothing is not safer. It is not cheaper. It is the silent killer of your financial future. So whether you are freelancing, consulting, flipping products, or building a brand, get your foundation right, because every dollar you save in taxes is a dollar you keep in power. The IRS does not reward the lazy. Let us stop pretending taxes are boring. Taxes are the battlefield where wealth is won or lost. And in 2025, with rising costs, economic uncertainty, and aggressive tax enforcement, you cannot afford to be lazy. Sole proprietorships are not a strategy. They are a starting point. LLCs are not magical. They are a legal container. S-Corps are not for everyone, but they are game changers for those who qualify. The system is not going to call you and say, "Hey, you are paying too much in taxes." It is your job to learn, adapt, and take ownership. Because while you are overpaying, someone else is structuring their income, reducing their liability, and reinvesting their savings into assets. You do not have to be rich to start doing this, but you do have to be intentional. The path to financial freedom is not just about making more. It is about keeping more. If this woke you up, then good. That means you are ready to stop giving away money just because you did not know better. In the next video, I will break down how to set up an S-Corp step by step and how to pay yourself properly so you never fear tax season again. Make sure you do not miss it. Your future self will thank you.